So US oil has, well, I mean, it's been weekly bearish here during the weekly bearish section, but oil could become very interesting again for a couple of reasons. And I have the coolest play on oil that I've been waiting like 3 years to be able to do. And I'm doing it now. I put it on Friday. So let me show you what I did for oil and explain what's going on with it. This is Brian Lewis with MMT Investing coming to you from Peru. I'm in Lima, and oil is interesting, and the trick is with the UCO. It's an ETN. And please like and comment, share, hit the bell, all that stuff if you like. And let's get into this chart. So we have this big, the big run from COVID, and then our topping pattern on the credit cycle here has pulled oil down a little bit. We're near a pretty normal oil level here, around 70. It's a high level. If you're above 70, oil's high. But let me show you. I mean, the downside here, we got like a target at 40, a target at 35, 45, 35, somewhere down here, which is about in half the oil price. That could happen relatively quickly. But what I wanted to show here is UCO. So the deal with an UCO is, the ProShares ETN. And I'm out on a weekly chart just so I can show you how ridiculous the structure of this thing is. This is a 3x. It's a 3x levered ETN, and it has daily compounding, and it also is built on futures contracts. So when you hit the bottom of the cycle, you get contango. And so like the futures contracts can be more expensive than the current contracts, and that can pull the thing down even farther. So you have like a 3x levered to begin with, and then it compounds every day. So you lose percentages every day at close. So if you go bearish for a couple months at a time, like that compounding on top of the leverage can really exaggerate the downside moves. So what I do with this UCO on the credit down cycle, you can throw a long-term put option on this thing. Yeah, I mean, look at the levels here. This thing was sitting flat around whatever 2,000, 2,500, right? And then you get a credit down cycle and it goes to $70 because of the compounding and everything. It's nuts. But this flat area, the oil price is going up the whole time, and it's fighting against the compounding, and it ends up flattening out, and then it super exaggeratedly crashes. The next upcycle is flat around 100, right? It crashes to what? 2, right? Crashes to 2. And then this last upcycle is steep enough that it's not quite flat, it's up, but now it's flattening out around 25. I mean, what is the down move going to end up with here? Like, where's it going to go to 50 cents? Like, if we do a crash in half on oil, like this thing could go to like less than $1 from 25, which is monstrous, and that's crazy. And so yeah, this is the secret trick. That's a long-term put. I was looking at the options chains on E-Trade, and that's not financial advice, just trade that I was doing. And if you do a January put, you can put it down to $8. It's starting at 25, and you can put it to 8, and that's as far as you can strike. But I mean, you can see how close 8 is on the way down to like $1. It's not even like a quarter of the way. So longer strike durations, you can strike at like 11, I think, or something like that, which is pretty good also. But yeah, anyway, UCO and USO also works, but it's only 2x levered. It's not quite as exaggerated as UCO. But this is the ridiculous, the ridiculous oil strategy. And then the point of shorting oil, like oil just generally does bad in a recession, but we have a couple of things on top of that. I mean, Russia specifically, but Russia is moving nukes into Belarus on the border of Poland. Like they're threatening, well, they're gonna end the war. Basically, is what's happening now. And the U.S. has had sanctions on Russia, so Russia can't use U.S. dollars to trade oil, and that was supposed to like destroy their oil trade. But all they did was just sell everything to China and India the whole time and not use dollars, and it really didn't affect them that much. So, um, yeah. So what's happening now is India and China have a ton of oil, and India is reselling it, but as soon as the war ends and Russia can sell to everyone else, there's going to be a supply flood, and all the BRICS countries, Russia, China, India are the big ones. But Saudi is looking at joining BRICS, Brazil. There's different oil companies. A bunch of countries in Africa, South America, Middle East are joining like this whole commodity group. And yeah, I mean, this is as we're coming into our session. Banks are crashing, liquidity, like there's a stack of things. But a supply flood from Russia and a recession pretty much will do it on its own. And yeah, and in the event that oil just, the price of oil goes in half in a few months, a long term put could put this thing, I mean, you could get 100x on a trade if this thing works. Let's go look at euro dollars. They haven't moved since my last video. It's on the weekend. But this is our credit hiking cycle. And so this is not Fed funds. This is euro dollar futures, which is forward looking. Fed funds lags by a month or something at least. But this tells you what's actually happening right now in terms of the inflation and the interest rates. And we hit an inflation top, and then banks started collapsing. Obviously, we got this peak reversal, and we have huge volatility in the interest rates, which this amount of volatility, I don't think this has ever happened. I mean, usually it's kind of flat sideways, and sometimes it'll jump in one direction, but like this kind of volatility in both directions is crazy. And then you can see on these cycles, on the credit cycles, it's on the way down where everything crashes. This is the dot-com crash. This is the financial crisis crash. This is the 2018 and COVID crash here. And so whenever we come down, it could be immediately. We could come down right now. It might drag out or kind of lag down and then move down in a couple months or something. But whenever this thing moves down, whenever the credit cycle, the interest rates are cut, you'll have a crash. The Fed will do an emergency rate cut, like pretending like they're controlling it or whatever. It's just like the interest rates will trade to a level, things will crash, then the Fed will do an emergency rate cut and just follow. That's all they do is just follow where this is, and they just announce where it is. Um, but yeah, anyway, that's where we are in the cycle, and these down moves are brutal, and they'll smash a bunch of different things, but oil's one of them. Like it'll hit oil for sure. And there, Bitcoin, I mean, should it usually trades with the market? I would expect Bitcoin to do the same thing. And then Nvidia is the big one that's leading. It's leading the Nasdaq, right? Nvidia has a huge way that it could come down, and I've showed this a few times. But the Nasdaq versus the S&P chart is it has broken its bubble trend, and it's back testing the bubble trend right now. It's like Monday or Tuesday. If this thing reverses, that means the Nasdaq is going to be leading on the way down, and Nvidia is leading the Nasdaq. So Nvidia could be the leading stock on the way down. The banks have already pretty much crashed out. I don't think there's too many good trades there other than Citibank is a big bank that has not, the chart hasn't crashed yet, and their balance sheet's awful, but I think they would be one of the last banks to fall if they do. Um, Ally is my most at-risk bank that the stock hasn't crashed yet, and that one, could go in half possibly or something like that. As far as like a bank short goes, Tesla and Coinbase are bubbly and exposed to all the risk. I think those are decent shorts with kind of obvious downtrends that you can use here. So like Coinbase, downside target around 20 in the next month or two. Tesla, downside target of 90 or something like that in the next month or two. And so yeah, those are kind of the shorts that I'm looking at. And there's tons of indicators also. Like the DXY is coming into support on this bubble trend, so DXY goes strong. It's not That's bearish. Um, the VIX, I mean, people look at the VIX and they look at 2 days worth of stuff, but you can see the VIX has been building volatility really steadily since before COVID. Like COVID is this one, but the VIX has been building up for a while towards a big move, and like this is just like a resting level for the VIX right now is almost in trouble, and just like one move up on the VIX and this thing is in big trouble. It doesn't really indicate when it will happen, but I mean, you can just see like you can see how easily the thing could blow up. And then we have the yield curve. The yield curve inverted big time, which means the short duration bonds, like 1 year bonds, are worth more than 10-year bonds right now, which is not supposed to happen. But it happens when you're at this end of a credit cycle and you're about to go down. Like that's when this happens. And this is a really, really big one. And we just had a reversal and like a break to the upside. And that's when the recession happens. You get the yield curve going steep again. That's when you get all the job losses and you get the credit contractions and you get deflationary signals, which is the opposite of what most people are saying. But yeah, that's where we are in the cycle. We're at the top of the cycle, just seeing when we're going to come down. And when we do, it could get ridiculous this time because we have all these banks that are upside down, and it could be just a series of banks. I mean, the first thing I saw was like there's 20 banks similar to SVB that could collapse. And then I saw one that's like 186 banks, and I just saw one that's like almost 2,000 banks that could collapse right like right now, which is just it's just nuts. Like I don't know if there was some kind of spiral where almost 2,000 banks like collapsed. I don't even I don't even know what would happen. But in any case, throwing a couple puts on just in case stuff collapses is looks like a good idea to me right now. And I mean, yeah, it's not super high risk just to have some puts. Um, but yeah, it can cover losses, or you could just put naked puts and just gamble on it. Yeah, all right. So that's oil and just the general idea of where the market is. I think that's everything. Yeah, I don't know. There's so many. I'm gonna be really happy when I can just like clear all of this meme stock garbage out of here and things make sense again, whenever that might be. There's just so many ridiculous stocks. I'll show you the rest of these banks, I guess, real quick. So yeah, these are out of the out of the almost 2,000 apparently banks that are gonna be in trouble here. These were the five that looked the riskiest to me, but they've already made huge down moves, so I don't really see much of a play on these. It's like Zion, Comerica, Key Corp. Yeah, they've all made huge moves down. Pac West, that was wild. That one made a huge move. These ones haven't gone insolvent yet, but they're just stocks are just crashing. Western Alliance. So yeah, those ones are already ridiculous, which leaves me with pretty much Citibank and Ally as my only two bank plays that haven't fallen. The stocks haven't fallen yet, but the bank could get in trouble. What's ARK Invest doing? Yeah, just kind of on a downtrend. And yeah, I was saying like Tesla and Coinbase are shorts that make sense, but I mean, 35 to 12, something like that. I mean, ARK Invest has Tesla and Coinbase as like two of the top holdings. So yeah, ARK or Tesla or Coinbase probably makes sense for shorting. It won't let me click on Tesla. There. So yeah, I mean, it's a pretty similar chart to what ARK is doing. And just what the general market's doing. I mean, Tesla pretty well follows the general market. It's stuck in this 200 range with the downside around 90 or something. But again, I mean, if things start moving down and then you get an exaggerated like pile of bank collapses, I mean, things could like make a huge stab to the downside, especially if you're trading puts or something like that. I mean, just wait for it to make a vertical stab and just close them, and that's that. Yeah, I think I already showed Tesla and Coinbase. But anyways, just general downtrends, but these are exaggerated and they're already looking pretty bearish. Versus, like Nvidia is not looking particularly bearish, but I mean that's gonna have more downside if it does move, if it comes all the way back to trend. That's a monster. So that is that whole situation. And I still have my crazy pattern. So I went and I compared our stock market bubble to the GameStop bubble and put the shape of the GameStop bubble onto this chart. And that has a downside target. If we followed the shape of the GameStop bubble pop, I mean, that would put the S&P at 17, like less than half of where it is right now by the end of the year, before the end of the year. And then another cycle. That would be really, really cool to trade. I mean, you could rip on the upside and then do another down move if it followed that pattern. And we'll see pretty soon if it does, because we're right in that area. So yeah, that's oil and a tiny bit of politics and puts, tricks for puts, put compounded leverage things, and it's a monstrously leveraged trade, and it's just limited downside. You can only lose the price of buying the contract, so that's pretty cool. Um, yeah, options trading. Happy gambling.